Dive even deeper into the action with our markets reporters now. Abigail, at the close, what are you watching?
Well, Caroline, I'm thinking exactly of those chip stocks that Romaine was just talking about. Take a look at this two-day chart, down 2 days in a row. The major averages might be down more than 1%, but the stocks right now on the day down more than 3%. And it's a combination of the earnings and Fed. We were talking about this yesterday, that it seemed like the stocks was ahead of itself. So earlier today, down more than 1% on AMD. The Apple quarter was good, but not amazing. Some of those suppliers sold off. But take a look at the Fed. The stocks really fell off of a cliff. So these are the growthier, more momentum stocks. So investors really reacted to that somewhat hawkish statement or comments from Fed Chair Powell to a greater degree than the major averages at the lows, down more than 4%, the worst day in more than 2 months. Let's put this into connection with the S&P 500 because the stocks tends to lead. Going back to March of last year, before all of the volatility, the last all-time high prior to this year for the stocks was in March. Now the stocks and the S&P 500 highly correlated, but the S&P 500 in blue went on to make all-time highs as the stocks simply went lower. The stocks and the S&P 500 climbing, but take a look at the stocks' big move lower right now. It could just suggest, Lisa, that there could be some big volatility ahead for the S&P 500.
Abigail, thanks so much. I wanted to take a look at the effects of some mixed messages from Fed Chair Powell. Take a look at the intraday chart of two-year Treasury yields. You could see that they initially crept up, then went up quite considerably when Fed Chair Powell talked about how this was a mid-cycle rate cut, but then came back down when he said that doesn't just mean one. Meanwhile, what the meaning of this all is the likelihood of slower growth ahead. At least that's what's being priced into the market. If you take a look at the gap between 3-month and 10-year Treasury yields, typically looked at as an indicator of potential recession risk, it did dip back into negative territory after Fed Chair Powell concluded his remarks. So there seemed to be a feeling that perhaps they wouldn't cut rates as much, leading to less longer-term growth. Renita.
Lisa, now that 25 basis point cut is in the books, there's still uncertainty about trade. And one of the commodities most susceptible to that are soybeans. So take a look at this intraday chart to see some of the action. Soybeans had actually fallen. And as you know, China and the United States completed trade talks for the week today. The Chinese confirmed a commitment to buy more U.S. agricultural exports. But today, spot soybean prices fell back to May lows. And soybean prices are tumbling on a long-term basis as well, down at the close to 6% on the year, which shows that traders remain skeptical that China won't buy any meaningful amounts of American farm goods. And trade talks, by the way, they pick right back up in September.